Megan, your initial reaction to the numbers Mike was laying out?
And this is straight down the middle of what people expected. And, every month I feel like we're desperately trying to figure out what the implications of trade are from the jobs data. And it's not necessarily coming through as strongly as we expected. So that trend continues. What's interesting to me is that the census was supposed to kick in April, May, June. We were supposed to see this huge jump. We still haven't seen it. And I'm curious, is that because we're innovating and, automating some of these jobs away? Is there a delay in funding? It's weird that hasn't come through yet.
This is as middle of the road
I know, it's pretty boring,
as
right?
it possibly can get, right? I don't really see anywhere where things stand out. Yes, we did see revisions for last month's 224 number down to 123. The participation rate went up a little bit. The earnings are still between 3.1, 3.2, so nothing to get super excited about. But the trend I think is very clear, right? You had 225,000 jobs on average in last year, and then this year you're starting to see that trend towards maybe 175, and that pace hasn't really changed. So the trajectory seems to be towards a modest slowing in the pace of job creation.
And we should expect that, right? I mean, somewhere between 100 and 150,000 is considered kind of neutral. Given where we are in the business cycle, this is still a pretty good jobs report.
So I have to wonder too, sort of, are wages okay enough to offset potential rise in consumer goods due to the tariffs? So, you have a read on that?
Yeah, I don't think so. So wages grew 3.2% year on year. That's pretty good for this cycle. But if you take that chart back further, that's really pathetic relative to where we are in the business cycle. So wages are still pretty low. And real wages are still pretty low. And so I actually think that, the wage picture looks exactly as it has done for pretty much this entire recovery, which is that we're both not getting much wage growth for a bunch of structural reasons. But even if we are getting a little bit of wage growth, it's not actually feeding through into inflation the way it used to do back in the day. And I think that's largely because firms just feel like they can't raise prices or they'll lose market share. It's sort of the Amazon effect.
Subadra, we're still seeing the outperformance on the 30-year in the U.S. What kind of numbers do we have to see for the market to actually think that growth isn't going to be terrible in the next 5 to 10 years? What the longer-term growth expectations?
So clearly the focus is not on the jobs picture, because it's been the shining star of the U.S. economy. So again, since at least what we know from this report is that some of the risks, underlying risks that we could have gotten from a weak number are getting priced out. So the market's back to focusing on all the other risks, which is tariffs, Brexit, a whole bunch of other global geopolitical risks, and that's where I think the market's going to shift its focus towards.